In this video, I'm going to discuss former President Trump's recent proposals about having Social Security no longer be taxable if he's elected president, as well as discussing how Social Security is currently taxed if you're curious how the taxes are calculated. Welcome back. This is episode 217. As political season continues to heat up and both presidential candidates continue to come out with their proposals and really make their case for, why they should be elected to the American people, the topic of taxation has recently come up. And former President Trump, now candidate Trump, has mentioned a few times that he doesn't believe Social Security should be taxed, and that if he's elected, he will see to it that Social Security is not taxed. So I want to delve a little bit deeper into that in this episode of what that might mean for you and whether or not I think that's a possibility, as well as just talking about how Social Security is currently taxed so you get a better handle on that. As a reminder, I recently published my first book, and this book can be very helpful if you're in the market for a financial advisor, if you're looking to hire your first financial advisor, or if you're working with a financial advisor and you're really wondering, do they truly have your best interest at heart? And my book is called Fiduciary, and it's all about the fiduciary concept, which is your advisor's legal obligation for those that are fiduciaries to put your interests ahead of their own and disclose any conflicts of interest that they have. And the subtitle is how to find, hire, and establish an aligned and trusted partnership with a fee-only financial advisor. And you can learn more by going to retirewithryan.com/book. And if you have read it, I greatly appreciate you doing so. If you could leave me a review on Amazon, that would also be very helpful. So again, as I mentioned, President Trump, former President Trump, now candidate Trump, has proposed Social Security no longer being taxed. And it's interesting that just a couple episodes ago, in episode 206, I talked recently about whether Social Security was going broke. And if you listen to that episode, you'll remember that the Social Security trustees are the ones that administer Social Security, and they come out with a report once a year that says, what is Social Security's solvency? When might it run out of money? Well, according to their recent report, by 2033, so less than 10 years from now, there would be a benefit cut in Social Security. So they estimate that the benefits would have to be cut by about 20%. So people getting Social Security, in 2032, starting in 2033, would get about a 20% pay cut. Now, obviously, nobody wants that to happen, and that's what I talked about in that episode, and you can go back and check it out. But the premise behind that is that there's not enough money going into Social Security as it is. And the last time there was a major change to Social Security was in the 1980s when President Reagan made Social Security taxable. That was one of the changes that was necessary. Now, that proposal, along with some other changes, increasing the full retirement age from 65 to 66 to 67 for younger people, is part of the reason why probably Social Security has been okay for the last 40 years. So if it was something that it became tax-free, that would be obviously wonderful. We'd all love to have no taxes paid on our income, and Social Security especially. And the way to do that would be to have to cut something else. So if there was a major cut in Social Security, then other monies from other places would have to be cut. Or I should say, if there was a major cut in the taxes that you pay on Social Security, other monies from other places of our budget would presumably have to be cut, or our federal budget would have to be cut. And obviously that would be wonderful in theory. I'm not sure how realistic that is or how that would happen. Having a major cut in our federal budget would be difficult for people getting laid off. Probably a lot of federal employees would get laid off, and then it could be difficult economically because the money that the government is spending would be missed, and that could lead to other consequences. I'm not looking to get in political debates on this show, but I do want to just talk a little bit about it. So it would be interesting if President Trump does get reelected to see if this proposal would actually fly, if other of his Republicans would agree with that, or some Democrats would agree with that, and how would they ever make this come to fruition? But my personal belief is that we really probably won't see that because of what we know already about Social Security. The fact that leaving it as is right now, and that's based on the Social Security taxes that you currently pay, and that's on earned wages. Everybody pays Social Security tax on earned wages, both you and your employer, or if you're self-employed, you pay both parts of that. And then also the taxes that the Social Security or the IRS is collecting from Social Security, the taxes that people are paying when they're collecting. So I think that has a high likelihood of not happening, would be my personal opinion. This is one of those times where, candidates are trying to get reelected. Obviously, the people collecting Social Security, the baby boomers and older, are a large demographic, and it's attention grabbing. It's a good headline. Hey, elect me and you won't pay taxes on your Social Security. But I don't know if that's something that could actually happen. And if it actually did, would that be majorly catastrophic because of the shortfalls that we already have in Social Security? And we haven't even discussed the shortfalls that there are in Medicare. So let's switch topics now. Let's talk about how Social Security is currently taxed. If you're not aware of how Social Security is currently taxed, there might be some minor things that you can do to reduce the taxes that you pay on Social Security. So I'm going to share a slide here. So I'll put a link in this if you're listening. If you're watching, obviously you're going to see this. But if you're curious how Social Security is taxed and you want to see what the numbers are visually, then I'll put a link in the show notes. This is episode 217. So if you go to retirewithryan.com/podcast/217, you can get a link to this information from the IRS website. So here's a slide from the IRS, or I should say a web page, where it says, how Social Security is taxed. So the first thing you have to understand is that the taxation of Social Security is based off your adjusted gross income. So that's any other earnings for the year. So if you're working and collecting Social Security, that would be factored into how much tax you pay on Social Security. If you're taking IRA distributions, 401k distributions, distributions from your retirement plans that are not Roth distributions, that would mean they were most likely taxable. That would be factored in as well. If you're getting dividends, if you're getting interest, if you're getting rental payments, anything that counts as income would be calculated to determine first your adjusted gross income. Then what you do is you add in any non-taxable interest. So if you own a lot of municipal bonds and you're getting interest from those, that has to be added back in as well, unfortunately. And then the last thing you add is 1/2 of your current Social Security benefit. So if you're single, you'd add 1/2. If you're married, both you and your spouse are collecting, you'd add 1/2 of your Social Security benefit, 1/2 of your spouse's benefit. So depending on that final number, that is your combined income for the determination of how much tax, if any, you pay on Social Security. So it's based on, again, whether you're filing as a single filer or a joint filer. So let's first focus on an individual or single filer. So if your combined income, that is your adjusted gross income plus non-taxable interest plus half of your Social Security benefit, is less than $25,000, then you actually pay zero tax on your Social Security. So there are some people who are currently not paying any tax on their Social Security, right? There is a income limit, so it's $25,000 for an individual, and it would be $32,000 for a married couple filing a joint return. So it's possible that you could not pay any tax on your Social Security. So for a married couple filing a joint return, I'm not sure if I just said this, but that number would have to be under $32,000. Now, if let's say you had no other earned income for the year, you weren't taking IRA distributions, you didn't have any non-taxable municipal bond interest, then you would just take half of your Social Security benefit. So let's say as a married couple, you and your spouse collect $50,000 a year from Social Security. Well, you would then take half of that, which is $25,000, and that would mean that you would pay zero tax on your Social Security. So it is possible for some people, if you're not taking IRA distributions yet, if you're not required to, if you haven't reached age 73, and you don't have other income that when combined with half of your Social Security would push you over that threshold, you could pay no tax on your Social Security. As an individual, if your income then, that combined income number goes over $25,000 all the way up to $34,000, then what you do is you add half of your Social Security benefit to your income tax return. So let's just say your Social Security benefit is $30,000 and you had to add half of that to your tax return. So you would add $15,000. So you would then pay Social Security tax based on $15,000, or tax on your Social Security benefit based on $15,000 of Social Security. If we'll stick with an individual just for a little bit longer here, if that number, your combined income was over $34,000, so let's just say you did have an IRA distribution, you did have dividends, or you did have interest, and that combined with half of your Social Security was over $34,000, then 85% of whatever you're getting from Social Security has to get reported on your income tax to determine how much tax you owe. If we then move over to somebody filing a joint return, that number, as I said, the limit is $32,000 to pay zero tax on your Social Security. But then from $32,000 to $44,000, your Social Security benefit is counted as half. So half of your Social Security benefit would be reported on your tax return. If you go over $44,000, then $85,000 of your Social Security benefit is taxable. Now, I'm saying is taxable, so that's, again, determined based on your tax rate. So as a retiree, your income tax rate is going to be based on whatever your total income is for that year. Our income tax brackets start out at 10%, then they go up to 12, then 22, then 24. So depending upon your income, you could pay anywhere from 0% tax on your Social Security all the way up to the highest federal tax bracket. It just depends. But there are already, which is interesting, some people that are paying zero tax on their Social Security benefit. As a single individual, if your combined income is under $25,000, you wouldn't pay any tax on your Social Security. As a married couple filing jointly, if your combined income was under $32,000, you wouldn't pay any tax on your Social Security. So it's interesting to note that some people are already getting that benefit, but as I mentioned earlier, that is something that candidate Trump is proposing. No idea if this will ever come into fruition. My personal feeling is that it probably won't, and it would probably be catastrophic to Social Security in the long term if Social Security did become non-taxable, because we would have to make up that lost tax revenue from somewhere else, and that would probably mean significant budget cuts elsewhere. So something to keep in mind. So I hope this gives, shed some light on this potential policy that might be going into place. We do obviously have a number of months until, first of all, we'll know the result of the election. And then even if candidate Trump was elected, there's no telling whether or not Congress would actually decide to pass this, right? Because Congress would have to decide to change the taxation on Social Security. It's not something that a president can do. But I hope this episode was helpful so you have a better handle on how Social Security is taxed. And there's definitely some tax planning strategies that you can do to help reduce the taxation of your Social Security. And that's where a good CPA or a good financial advisor can be helpful. Thanks for tuning in. As always, if you have a question you'd like to have considered for a future episode, you can leave it by going to retirewithryan.com and clicking on Ask a Question. Have a great week.